There's a moment before every unnecessary trade. You recognize it. Price is hovering near a level you marked hours ago. You've drawn the line. You've respected it all session. Now price is approaching it again. Your pulse changes. You lean forward. You tell yourself this is the level. Notice the language, not this might be. This is. You've turned a line into a promise, and promises create pressure. The market hasn't confirmed anything, but you already feel committed. This is where most traders lose control. Not after entry, before it. You believe the level matters because you marked it, because it worked once, because it reacted before. But here's the uncomfortable truth. The market does not remember your lines. It does not respect your drawings. It does not reward your preparation. It rewards alignment. And alignment is broader than a single price. Yet you reduce uncertainty into a thin horizontal line. Because precision feels safe. Precision feels intelligent. But false precision is one of the most expensive biases in trading. You convince yourself, if price touches here, it must react. Must. That word is dangerous. Markets do not operate on must. They operate on probability, and probability never guarantees. But your mind hates probability. It wants certainty, so it clings to levels, support, resistance, previous highs, previous lows. You build a narrative around them, and then you wait for price to validate your belief, not to reveal structure, to validate you. This is not analysis, it's attachment, and attachment destroys patience. Because once you're attached to a level, waiting becomes harder. You're not observing anymore, you're anticipating. You want it to react. You need it to react. Because if it doesn't, your certainty collapses. And ego doesn't like collapse. So you enter early. Before confirmation. Before alignment. Because you'd rather be wrong quickly than uncertain longer. That trade is not about opportunity. It's about psychological relief. And this connects dangerously to what happens next. Because the moment you attach to precision, you lose your ability to sit. And without the ability to sit, you cannot survive long enough to catch real moves. By the time we reach the final rule, you'll understand why patience isn't passive. It's structural dominance. But first, you need to see how deeply this attachment runs inside you. Price taps the level. It reacts slightly, not strongly, just enough to make you hopeful. Your eyes narrow. You zoom in, lower time frame. You start searching for confirmation, not real confirmation. Emotional confirmation, a small wick, a tiny rejection, a 1-minute candle closing in your direction. You don't want structure. You want permission. This is where patience collapses, because now you are no longer observing the market. You are negotiating with it. You say, if it just gives me one more sign. One more sign before what? Before you feel safe enough to act. Notice what just happened. You reduced uncertainty into a single pixel movement. You took something complex, multi-layered, probabilistic, and compressed it into a micro-signal. That is false precision. It feels sharp. It feels disciplined. It feels technical. But it's fragile. And fragility under pressure breaks. Inside you, something is tightening. You don't want to miss the move. You don't want to look foolish for waiting. You don't want to be the trader who knew it, but didn't act. So you start justifying. It's close enough. It's basically aligned. It usually reacts here? Usually. Another dangerous word. Patience dies in words like that. Because now you are bending criteria, not following them. True patience is binary, aligned or not aligned, ready or not ready. There is no almost. But the mind hates binary decisions. It prefers gray areas. Gray areas allow emotional adjustment. and emotional adjustment leads to premature execution. The trade hasn't earned your capital yet, but you're preparing to give it anyway. Because the longer you wait, the louder the internal pressure becomes. That pressure is not coming from the chart. It's coming from the need to be right, the need to act, the need to feel competent. And this is where traders confuse decisiveness with discipline. Decisiveness is acting quickly. Discipline is waiting correctly. They are not the same. You think patience means hesitation. It doesn't. Hesitation is confusion. Patience is clarity, withheld until alignment. But clarity takes time, and time feels expensive. So you rush the conclusion, you tell yourself the setup is there, you convince yourself it's good enough. And once you decide internally, you are already in the trade, psychologically. Even if you haven't clicked yet, that psychological entry is dangerous. Because now you're biased. Every candle after that moment will be interpreted through attachment. Small moves in your direction feel meaningful. Small moves against you feel temporary. You're no longer objective. You're invested before risking $1. This is the internal pressure that destroys consistency, and it connects directly to the next mistake. The relief trade. Because once you've mentally committed, clicking the button doesn't feel risky. It feels relieving. And relief is the most misunderstood emotion in trading. We'll expose that next. You click, and something changes immediately. Not in the market. In you. Your breathing slows slightly. Your shoulders drop. The tension that built during waiting dissolves. You feel better. Not because the trade is good, because the uncertainty ended. This is the relief trade. And it is one of the most expensive habits in trading. Relief is powerful. It tricks you into believing you made a disciplined decision. But relief is not clarity. It is emotional discharge. You were uncomfortable. Now you are not. So your brain interprets that as progress. But nothing has improved structurally. You didn't wait for alignment. You waited until discomfort peaked. Then you executed to silence it. That's not strategy. That's therapy. And therapy, through execution, always costs money. Notice something subtle. After entry, you stop analyzing with the same intensity. Before entry, you were cautious. After entry, you are hopeful. Hope replaces precision. You're not scanning for invalidation anymore. You're scanning for confirmation. Because now it's personal. You're in. And being wrong now carries weight. So you defend the position internally. You widen stops. You reinterpret structure. You convince yourself it just needs time. But time was what you refused to give before entry. Now you're giving it freely after. This is backwards. Patience should exist before the trade, not after it. But most traders reverse the sequence. They rush the entry, then pray for patience once exposed. Relief trades create fragile positions because they are built on emotional release, not structural inevitability. And fragile positions require constant monitoring. You can't relax. You check the chart repeatedly. Every tick matters, because deep down you know it wasn't clean. This drains mental energy, and mental fatigue reduces discipline, which increases the probability of the next premature trade. The cycle compounds: relief, fragility, fatigue, impatience, again and again. The dangerous part? Sometimes the relief trade works. Price moves in your direction. You profit. And now the habit is reinforced. You tell yourself, see, it reacted at the level. But it wasn't the level. It was probability. And probability occasionally rewards impatience, just enough to keep you trapped. This connects directly to something most traders protect fiercely: their belief in precision, their belief in catching exact turns. And once that belief hardens, patience becomes almost impossible. Because you start chasing perfection instead of waiting for alignment. We'll go there next. There's a quiet pride in being early. You feel it when you catch a move before it expands. You feel sharp, ahead, disciplined. But look closer. Was it discipline, or was it ego dressed as foresight? Being early feels intelligent because it suggests you saw what others didn't. You spotted the turn. You anticipated the breakout. You entered before confirmation. But confirmation is what separates probability from projection. When you enter before structure completes, you are not trading inevitability. You are trading opinion, and opinion under pressure becomes attachment. You don't just want the trade to work. You need it to justify your anticipation. That need contaminates patience, because now waiting feels like doubt, and doubt feels like weakness. So you train yourself to act quickly, to trust your instinct, to respect your read. But instinct without confirmation is impulse with confidence, and confidence without structure is dangerous. Notice what happens inside you when price hesitates after your early entry. You don't feel calm, you feel exposed, because you know you entered before it was undeniable, so every tick against you feels personal. You start managing emotionally instead of strategically. You tell yourself, it should move now. Should. Another word that reveals attachment. Markets do not move on your schedule. They move when participation shifts, when liquidity expands, when imbalance builds. None of those care about your timing, but your ego does. Your ego wants precision, exact entries, exact tops, exact bottoms, because exactness feels like mastery. But false precision is one of the most seductive traps in trading. You reduce a complex auction process into a single price, a line, a number, and you expect obedience. That expectation destroys patience. Because when you believe you can pinpoint the exact turning point, you stop waiting for confirmation. You stop waiting for structure. You stop waiting for inevitability. You start hunting for perfection. And perfection does not exist in probabilistic systems. Professionals do not need exact tops. They need favorable structure. They do not need to be first. They need to be aligned. Being first feeds ego. Being aligned feeds accounts. This distinction is subtle, but financially brutal. And it connects to something deeper, because once you start chasing precision, you begin trading to validate identity, not to execute edge. And identity is far more fragile than capital, which leads directly into the slow erosion most traders never see coming. Most accounts don't collapse in a single mistake. They thin out quietly. A small premature entry, a minor stop out, another attempt near the same level, another controlled loss. Nothing dramatic, nothing reckless, just slightly early, slightly impatient, repeated. This is erosion. And erosion is more dangerous than explosion, because it feels manageable. You tell yourself, it's only 1%. It's within plan. But the real damage isn't just financial, it's structural. Each early trade weakens clarity. Each unnecessary loss adds noise to your decision-making. You begin adjusting criteria, not because structure changed, because you're reacting to friction. You widen your lens, then narrow it, then switch time frames, searching for reassurance. But reassurance is not edge. And here's the part most traders miss. Impatience doesn't just cost you money, it costs you positioning for the real move. When the market finally aligns, when structure becomes undeniable, when asymmetry expands, you're no longer neutral, you're tired, you're hesitant, or worse, you're recovering. You've already spent mental capital. So, when the opportunity you were supposed to wait for finally arrives, you don't size it properly, you don't trust it, You hesitate, or you overcorrect. You increase size impulsively because you feel behind. Now you're no longer trading structure. You're trading recovery. And recovery trading is emotional trading. The slow bleed creates internal doubt, not loud doubt, subtle doubt, the kind that whispers, maybe I'm not seeing this clearly. Maybe I need to act faster. Maybe I missed something. So you act more, not less. And that accelerates erosion. What makes this dangerous is that nothing feels catastrophic. Your account isn't blown. Your losses are small. Your logic sounds reasonable. But patience has already been compromised. Because patience requires psychological stability, and erosion destabilizes quietly. You can survive volatility. You cannot survive chronic impatience. This is why the market punishes those who refuse to sit, not immediately, gradually. And by the time you recognize the pattern, you've trained yourself to operate under pressure instead of clarity, which leads to the illusion most traders mistake for discipline. Hard work, screen time, constant engagement. We go there next. You wake up early. You mark levels. You review higher time frames. You prepare. You tell yourself you are serious, and you are. But seriousness is not edge. You sit in front of the charts for hours, watching, tracking, adjusting. It feels like work, and work feels productive. But the market does not reward effort. It rewards asymmetry. Asymmetry is rare. Effort is constant. Most traders confuse the two. They believe that more screen time increases probability. It doesn't. It increases temptation. The longer you stare at price, the more patterns you begin to see. The more micro movements feel meaningful. The more you convince yourself something is forming. You call it reading the market. But often, you're manufacturing relevance. Because inactivity feels irresponsible. You think, I've been here all morning, I should take something. That thought is dangerous. It turns patience into guilt, and guilt pressures execution. You begin lowering criteria subtly. This is close enough. This usually works. It's reacting. Almost aligned, almost confirmed, almost safe, almost profitable. Almost is where accounts decay. Real alignment feels obvious. Not exciting, not urgent. Obvious. But obvious conditions are rare. So most days produce nothing. And nothing feels like failure to the undisciplined mind. So you create something. You trade the in-between. You trade the noise. You trade because you've invested time. But time invested does not obligate the market to produce opportunity. This is where many traders collapse internally. They think patience means inactivity without progress. But patience is filtration. You are not here to be busy. You are here to be selective. Selection requires rejection, and rejection requires emotional stability. Most traders cannot reject opportunity. They fear that rejecting means missing, but filtering means surviving. The professionals you admire are not trading constantly. They are waiting constantly, waiting for expansion, waiting for imbalance, waiting for inevitability. Everything else is background movement. If you feel tired after a trading session, it's often because you fought the market instead of filtering it. And that fatigue leads to the next internal fracture. Fear, not fear of loss, fear of missing. We go there next. Impatience looks aggressive, but it isn't. It's defensive. Underneath the urge to click, there's something quieter. Fear, not fear of losing money, fear of being left out. You see price expanding without you. You see candles accelerating. You imagine others entering. You imagine others profiting. And something inside you tightens. It whispers, you're missing it. Missing feels dangerous, not financially, psychologically, because missing feels like falling behind. and falling behind threatens identity. You don't want to be the trader who knew it but didn't act. So you act. Late, fast, without full structure. You call it decisiveness. But it's urgency. Urgency is not strength. It's insecurity under pressure. You convince yourself the market won't give you another chance. But markets are continuous auctions. There is always another opportunity. What there isn't always is preserved capital or preserved clarity. Fear of missing makes you chase extension. You enter after expansion. You buy high because you watched it climb. You sell low because you watched it fall. You justify it with momentum, but deep down you know you're reacting to emotion, not structure. Fear compresses time. It makes every move feel final. It makes every candle feel decisive. It magnifies noise into threat. And under compression, patience collapses. Because patience requires temporal perspective. The understanding that markets unfold in cycles, that opportunity is recurring, that asymmetry reappears. But fear tells you this move is unique, irreplaceable, now or never. That internal narrative is dangerous because it detaches you from process. You stop asking, is this aligned? And start asking, am I missing it? That shift alone destroys discipline. And here's the quiet irony. The more you fear missing, the more you create losses. And the more you create losses, the more urgency increases. It becomes a loop. Fear, action, loss, pressure, more action. The only way out is not faster execution, it's controlled inaction. But controlled inaction feels unnatural. It feels like weakness until you understand what patience actually is, not emotionally, structurally. We go there next. Patience is misunderstood. Most traders think patience means sitting on your hands, waiting passively, hoping something clean appears. That's not patience. That's hesitation. Patience is structured restraint. It is predefined criteria enforced without negotiation. It is knowing exactly what must align before capital is exposed, and accepting that most conditions will fail that filter. If multiple time frames are not aligned, nothing happens. If structure is incomplete, nothing happens. If risk cannot be defined clearly before entry, nothing happens. No emotional override. No internal bargaining, no close enough, nothing. This sounds simple, but simplicity is violent to the undisciplined mind. Because discipline removes flexibility, it removes interpretation, it removes ego. Patience requires that you do not need the trade, that you are not emotionally invested in a level, that you are not seeking relief, that you are not chasing precision. It demands neutrality. Neutrality feels empty, but neutrality is power. When you are neutral, you are not attached to outcome. You are attached to structure, and structure is indifferent to your opinion. Here is something most traders resist. You should know before the session begins what qualifies. You should know what invalidates. You should know what disqualifies. If you are deciding in real time, you are already compromised. Real-time decision-making under emotional pressure is fragile. Predefined criteria under calm conditions is durable. This is why patience must exist before volatility appears, not during it. Once price accelerates, once candles expand, once emotion rises, your ability to think clearly decreases. So the filter must already exist. Patience is not about waiting longer. It is about refusing lower standards. And refusing lower standards means accepting fewer trades. Fewer trades means fewer opportunities to be wrong. And fewer wrong trades means preserved capital. Preserved capital means survival. Survival means positioning for asymmetry. And asymmetry is where accounts grow. But this only works if one final shift occurs. Because even with rules, most traders still sabotage themselves internally. The last step is not mechanical. It is identity. We go there now. You are not waiting for the market. You are waiting for yourself. That is the shift most traders never make. You believe patience means allowing price to develop. But price will always develop. The real variable is you. Your need to act. Your need to validate analysis. Your need to feel competent. Your need to recover. Your need to participate. Those needs distort perception. They make incomplete structure feel sufficient. They make weak alignment feel convincing. They make urgency feel intelligent. When you say, "I just have a feeling," ask yourself, is that feeling clarity, or is it discomfort seeking release? Because clarity is calm, discomfort is restless. Restlessness pushes execution. Calm allows observation. If a trade feels urgent, it is usually ego. If a trade feels obvious, it is usually structure. Obvious does not feel exciting. It feels quiet. You don't need to convince yourself. You don't need to negotiate. You don't need to reduce time frame to justify it. It simply aligns. And when it aligns, you don't feel relief. You feel neutrality. Neutrality is underrated. Most traders chase adrenaline. They mistake intensity for opportunity. But intensity is emotional noise. Opportunity feels boring. It feels slow. It feels almost too simple. That simplicity threatens the ego. Because ego wants complexity. It wants to feel superior. It wants to feel early. It wants to feel sharp. But the market rewards patience, not pride. This is why the shift is uncomfortable. You must detach your identity from being active, from being precise, from being right, and attach it instead to being selective. Selective traders are not impressive in real time. They look inactive. But inactivity is not weakness. It is filtration. And filtration is dominance. Most traders operate in reaction. Professionals operate in qualification. They're not asking, "Can I trade this?" They're asking, "Does this deserve capital?" That question alone changes behavior. But there is one final piece. Because understanding patience intellectually is not the same as embodying it. The final rule is not technical. It is structural dominance over impulse. And once that becomes internal, everything before it makes sense. Here is the final rule. The big money is made by sitting, not thinking harder, not reacting faster, sitting. Sitting when price approaches your level. Sitting when it reacts slightly. Sitting when it almost aligns. Because almost is not alignment. You saw how attachment to levels creates pressure. How false precision makes you anticipate instead of observe. How relief trades feel good but weaken structure. How being early feeds ego. How small impatience erodes positioning. How effort disguises urgency. How fear compresses time. All of it leads to one fracture, the inability to endure stillness. You believed patience meant waiting for price. It doesn't. It means waiting for yourself to become neutral. Waiting until ego is quiet. Waiting until fear is irrelevant. Waiting until criteria are met without negotiation. When alignment is real, it does not feel urgent. It feels obvious, calm, procedural. There is no internal debate, no emotional spike, no need to justify. Execution becomes simple, because patience filtered everything else out. Most traders never reach this point, not because they lack intelligence, but because they refuse to sit long enough for inevitability to appear. They convert discomfort into action. They convert action into friction. They convert friction into erosion. And they call it experience. But experience without restraint is expensive. The market will always move. The question is whether you will, or whether you will finally stay still long enough to see what deserves capital. If this way of thinking feels uncomfortable, good. It means you're no longer trading for activity, you're trading for alignment. And if you are serious about becoming selective instead of reactive, then stay here. Because this channel is not about trading more. It is about trading only when it matters. Silence.